Hey guys, what is up? It is Greg here from Personal Evolution. Today, coming at you with another GameStop special. This week, we're looking at a summary of what's been going on. Last week was probably the craziest week on record, but in a famous meme, or maybe what Homer said to Bart at the end of the Simpsons movie, so far. So, what does this week hold? Where could it go? What's happened to the likes of Melvin Capital, and why this could be the start of the end of the stock market, or a great deleveraging or degrossing, as it's called. So stay tuned to find out that. Give us a like and a subscribe if you're liking the content, and let's dive straight in. So straight away, start in the usual way. We'll get a stock price update. As you can see, it's been a bit of a crazy ride, and we're still, looking at a decent time frame here. Well, where's my chart gone? Let's zoom out a bit. Where are we? Was this Friday? This looks like Friday. What's the date? 29th. Yeah, so this was Friday. So weirdly, I think Friday was one of the more stable days, even though we had stable day in amongst some craziness. I mean, you can see the drops and stuff here on the Thursday, which was when the Robinhood stuff kicked in. But yeah, just a kind of price update. It was steady kind of throughout Friday. Well, I say steady, between 250 and 350, which is steady in these times. And I was just looking through the news, and yeah, a couple of things caught my eye. So more than 1.2 billion shares were traded for GameStop in January. That is more stock traded in the final 6 months of 2020, which is mad. The total shares available for trading turned over about 25 times. That's more than once for every trading day, which is historical. Yeah, in terms of like the wider market, we saw the craziness going on in GameStop did mean that there was a bit of a sell-off in the wider market. S&P dropped about 3.3%, but most of the companies, 80%, were kind of reporting better earnings than expected. So yeah, I think where all the craziness was going on with the GameStop, that kind of got pushed to the bottom of the pile. So yeah, that's kind of where we are. We've got retail investors driving the market. We've got hedge funds scrambling to cover their shorts. Let's take a look at our favorite people, Melvin Capital. Now, these guys were one of the ones that started the short squeeze. They were probably the most. They had the most outstanding shares, along with Citron, who was, I don't think, such a big position, but they were quite popular. Citron, we know, has bowed out of promoting their short reports, which, I mean, it's been doing it for 20 years. If you ask the CEO of it, it's a great disappointment, because he used to be kind of, anti-market, blah, blah, blah. And yeah, he posted this kind of heartfelt video. Other people, it's a bit of a win because short sellers have quite a bad reputation for just saying stuff to make the price go down so they can profit. So that's what happened there. Melvin Capital got bailed out by 0.72 and Citadel, who we'll come back to in a bit, because we have since found out that these guys have huge positions in AMC, BlackBerry, and other stuff. So there's a bit of a weird dynamic going on there where they may be losing loads in terms of the shorts, but BlackBerry, AMC, and the other ones that are being driven up, Nokia, they seem to have positions in all of these. So there's an interesting dynamic going on there. But in terms of Melvin Capital, so the source who knows Melvin Capital. So Melvin ended January with more than 8 billion in assets after having started the year with roughly 12.5. So we've really cut them down massively. This is off the back of the short selling activity in GameStop, where they had sold more than 100% of the GameStop shares, and there'll be a little explanation of that at the end. The fund's portfolio liquidity is strong, and the use of leverage is at the lowest level since Melvin Capital's inception. So apparently these guys are, although they're down, they're definitely not out. And with Citadel on 0.72 backing them up, I think they'll have their short positions covered for a while. The mainstream media says that they've closed out their short positions, although I can't remember where I found it. It might be on the next one. The short positions outstanding have only dropped by about 8%. So whether that was, Melvin closing it out, we don't really know. So where are we next? Oh yeah, here's the many hedge funds still remain on the other side of the GameStop trade, with the number of shares having been shorted only dropped by 8%. Yeah, and they're really preparing this week. Hedge funds, bankers, whatever, are looking at all the other shorted positions. So I think I've said in the previous videos that personally, I didn't invest in GameStop, and I still don't, recommend it as my opinion, because it's crazy for me. I mean, it's too much risk, but I'm maybe overly sensible here. But what I have done is looked at other stuff that is shorted, and I can link below to the Zero Hedge um, post that kind of outlines all the short positions. So definitely check that out if you're interested in seeing what other companies could see the same. I'm not going to say the same, actually. Could see rises in the short term. I think what we're seeing here is quite a short term thing. And already we're seeing kind of the cracks in the drive to get GameStop higher. Although if I go back to our little chart here, we're already up 11 points, 3.63%, which is nowhere near as crazy as the first day. So maybe what we can expect today is kind of similar play to Friday, where we see a slow and steady tug of war between shorts and buying. Who knows? So yeah, let's bring in the other party, which is Robinhood. Robinhood got a load of flack towards the end of last week for limiting, and they are still limiting the stocks. Now, the party line on this was that as a brokerage firm, Robinhood has many financial requirements, and they basically couldn't meet these. So to explain this, I think I've done another video on it. Clearinghouses require a little deposit to cover the position while they sort out and verify the trades. The clearinghouses are the guys who sit behind the brokers. So the broker, if you want to trade, the broker goes, okay, I'll take your trade, goes to the clearinghouse, says, this person wants a trade. Clearinghouse goes, okay, here's the seller. Here you go, broker. Broker goes, okay, here you go, Bob. And that's kind of the way it works. So the clearinghouses have certain requirements around capitalization, and they've all raised their standards. And we've heard this from multiple sources, so I'm inclined to believe it. So what Robinhood have done is, I can't remember if it says it in here. They've got basically a slimmed down. They've got a list of stocks that you can only buy a certain amount with. I think it was 5 stocks last week, but now it's down to 1 for GameStop, for instance. Oh, here we go. Here's the list. So yeah, as you can see, they're really restricting the trades you can do, and in some you can't do option contracts. So yeah, that's probably the main update from Robinhood. Now, talking about kind of the week to come, we've got Robinhood just announced that they raised $1 billion to cover these updated capital requirements from the clearinghouses. So what I think we'll see is maybe the limits get raised a bit as this week kind of wears on. And yeah, kind of touching back on the what's going to happen this week. Already we're seeing GameStop gains slowing because of this new silver squeeze that everyone's saying. So the silver, where does it say how much it climbed? Should have had this all written. But basically, what we're seeing is now that now that GameStop seems to have been played out, and most people are kind of a bit hesitant about getting in at this price, we're actually seeing the Reddit community split, and now people are looking at silver. We got AMC, like we've already mentioned, and all the others. So yeah, that's kind of where we are. What the final thing I wanted to cover was maybe what all this activity could lead to. I know some people have talked about it quite a lot, but I found two really great threads that I wanted to share. Now, I will link to these below, but Chamath and Mark Cuban, or Cobain, no, not Cobain, Cuban, Mark Cuban, had some really great kind of explanations on what's going on. And I'll just read a bit from the Chamath one to kind of explain maybe a kind of a little bit of what could happen in the coming days. So the short squeeze might still work, and that's because stuff is still oversold. Now, there's been some. It's called when people sell their other positions to cover shorts. It's called a degrossing, which is basically where hedge funds deleverage their positions. And so, yeah, well, as this thread explains, it's happened before in Q4 18, September 19, March 20. This is the current one, but we might see that people, this kind of thing continues, and we see across the sector hedge funds getting more and more nervy about exposure to the GameStop. So as Reuters kind of announced, Goldman sees hedge funds exposure close to records, and we think we're going to see more and more of them selling off. It's still at the highest level so far, so we could see more of these run-ups if the short positions are maintained. And this little Mark Cobain, here we go, Cuban pace is still kind of on the cards as an explainer for what Melvin Capital has done. So yeah, that's it. Hope that all made sense. I know I kind of ran through it at a fair lick. If there's any questions, please drop it in the comments. And yeah, I'd appreciate a like and subscribe. I'll keep bringing out this content as it stays relevant, and hopefully bring out some more content where I take my own analysis for new companies that are coming up, and go back to some more of my usual kind of startup guides and stuff. So yeah, that's the plan. If you like the sound of that, please click subscribe. As always, thank you for watching. Let me know what you think in the comments, and yeah, let's see what this crazy week holds. Okay, cheers.